So we've talked about how the new passive income rules work. Let's get into how much tax is actually on the line should you have your small business deduction rate completely wiped out. So we're going to use an example of someone in Ontario. So in Ontario, the tax rate for small business corporations is 12.5%. So if you were to earn $500,000 of income times by the 12.5%, it's written down so I don't get it wrong, that's $62,500. So what somebody who doesn't have any clawback from the passive income will pay on their corporate tax earnings of $500,000 is $62,500 in tax. If you've been completely wiped out of the small business limit because you've had too much passive income, the tax rate that you will have to pay is 26.5% in Ontario, and that equals total tax of $132,500. Okay, so if you've been completely clawed back, you're at the general rate opposed to the small business rate. Your new tax is going to be $32,500, and I think the difference between those two numbers is $70,000. So that's a lot of tax per year that a corporation will have to pay if they don't manage their passive income clawback. So on top of having to pay an extra $70,000 of extra tax should you have the clawback, you're also subject to a high income tax rate on your passive income. So in Ontario, it's 50.2% tax rate on the passive income. So on top of more income, you're also paying a super high tax rate on passive income. In our next videos, we're going to get into some ways in order to avoid this clawback and ensure that you can be paying this amount of tax opposed to the $132,500.